Could we see a construction boom in 2025? Experts think it's possible, with bigger pockets predicting lower interest rates might actually spark a new building activity within the next 5 years. I'm Chris Clothier, and today I'm going to break down what this means for us as real estate investors, and more importantly, the real estate market as a whole, and what kind of opportunities does it present for us going forward. So the current inventory for U.S. housing, it's been crazy over the last, I would say, almost 16, 17 years since housing starts really began to plummet. Now, we've had record low housing starts since they actually recorded the number of housing starts we had in the U.S. back 60, 70, 80 years ago. The last few years have just seen this record low number of starts. And why this matters for us is that home formation, the number of new families that are moving out of their parents' houses or moving out of apartments, looking to buy single family homes, those numbers, they don't stop. Every year there's what we call new household formation. And so the problem is that there's no housing for them to move into. Builders coming out of the housing crash, they started building bigger houses where they could, of course, add a second story without having to pour the concrete foundation, so they could build something bigger, get more square footage, get more value for the dollars they're spending to build in return, because they are, it's cheaper to build a second story than it is to build a first story. You started seeing, I wouldn't say radical, but you started seeing new housing designs that were more focused on, open spaces and views, which for us as the consumer, it sounded like, hey, this is, being built with us in mind and what we want to see. The reality was it was cheaper to build houses with fewer interior walls, with fewer upstairs bathrooms, bringing the bathrooms downstairs and doing extra play spaces upstairs, all kinds of different little tricks that builders were using. And they're not, tricks is kind of a strong word. They were just doing things to reduce their cost and make more money. And so when you can do these things, lower your cost, build bigger spaces, bigger houses, more square footage, what happened is inadvertently they started pricing out the beginning investor. And they started thinking, okay, we're going to take the beginning supply. Those buyers are now going to move into the new supply that we have. And the people moving out of the bigger houses, that are the second purchase, they're going to start moving into even bigger new supply that we have. And then we're going to allow room for the new house formation to move into these older homes, to make their first, their first purchase. The reality is that this high pent up demand for housing, and coupled with later, the last 5 years or 2019, 20 through 2023, where these lower interest rates during a lot of that time, what it's led to is people sitting. The houses are not coming up. There is a super low supply and very high demand. And when the interest rates went high to curb inflation, what happened was people who had locked in lower rates, they quit moving, period. And so today we have low inventory, low construction costs, higher interest rates, and this demand that just keeps getting pent up and pent up and pent up with nowhere for it to go. So what happens next? So if we get more housing supply, so if this construction boom that is kind of being discussed and talked about, you've got housing starts for 2024 at an all-time low because builders are waiting for interest rates to fall just a little bit to put as much money back in as possible. Not only are the builders waiting, but the money supply is waiting. So you've got money sitting over there saying, hey, we're ready to get in and get going. They want to fuel the builder growth. So the second the builders start building more homes, possibly in some areas, it leads to stabilization. We're seeing some, due to lack of activity, pricing is beginning to fall a little bit. And it's falling down to a spot where builders want to get in because they know that as soon as they get in with new product, the demand comes to them quickly. The newer modern homes may also be just the right amount of pressure to existing sellers to say, you know what, my rate's good. Maybe I locked in the upper threes, lower fours. Now I can get something in the higher fours, but much bigger. For a few more dollars, I end up getting a lot more space. It might be worth it for builders to go ahead and cash out and change up. Impact on rent prices. So increased rental property supply could lower rent prices. So how does the construction do that? Well, as these houses go vacant, as people move into new construction homes, there's an argument to be made that a lot of that supply will be sucked up by real estate investors. Because real estate investors already have high demand. Investors tend to want to go towards older homes that they can refurbish or bring back to a more modern style to reintroduce to the market, but on the rental side. The impact, again, it's going to vary by area. Some areas are already being kind of impacted this way, that all the new supply has been sucked up already. And so investors have already piled into all the old properties. We'll see what happens. But it could, as you bring more rental properties in, it could lower pressure on rent prices, maybe allow for more renters to get in faster, make us as investors compete a little bit more. We'll see. The one thing that I think definitely happens once we start building houses is that investors have to realize there's a new dynamic. But I think this has been happening over the last couple of years. New construction or not new construction, this is just the reality that more investors today are passive than ever before. And I think that's going to continue on into the future until passive investors are a larger percentage of the investor group than active investors. So most investors will be passive in that they buy in other markets and they outsource third-party property management. They may even outsource third-party, finding the properties, third-party renovating the properties. They could go full turnkey like what we do. But the bottom line is this. Investors are going to be squeezed. Investors are going to have to kind of make the decision of, do I want to be a long-term investor or do I want the hope that I can be a short-term investor? Meaning short-term, I want to make some money while I'm going here. And if I get a pop, I'm out. I'm out of here because I really don't have the stomach to hold long-term. The long-term investor is the one that's going to sit here and say, I'm gonna buy long-term. I'm not going to make as much profit today because profit margins have been squeezed. I cannot buy the property as deep of a discount as I used to. Rents are not growing as fast as home prices grow. So therefore, I've got to wait for my rents to catch up. But while my rents are trying to catch up, the value of my home is going up. I locked into the price, but it's going up. So in other words, I'm going to take less money now to make more money later. Eventually my rents, they catch up and they catch up to the values. Perhaps taxes do too. Perhaps over 7 to 10 year period, my CapEx is it's eventually going to catch up. I will eventually have some move outs. I will eventually have possibly a second renovation on the property. And so my, what we would call cash flow, my passive income on this property is going to be negligible to zero after 7 to 10 years because I will have used that money to be able to hold the property and operate the property and keep it up in the right condition. However, that money was all given to me by a renter. So it's not like I didn't get value out of it. All that money not only was given to me by a renter, but also that money was used to lower my principal, pay down my original loan. And now as the property goes up in value, that's the spread I'm going to make. Someone paid this down while it went up in value and I'm going to make the money in between, which, by the way, is multiples of what you would make from cash flow. So I think that's what's coming next for investors is this understanding that as these houses come in, if I'm going to be a long-term passive investor, I'm going to make my money on the 7 to 10 year call on this. I also think that with an increase in construction, with lower interest rates and easier to get money, we're gonna cool off some overheated markets, and we're gonna get a nice sustainable price point where we as investors and even homeowners and even renters all kind of coexist in just a really well-oiled market. You'll see that, I believe, primarily in the Sun Belt states. It's going to be primarily down in the South, Texas, Southeast, and Southwest. I think in these areas you'll see probably the most market stabilization, in my opinion. It's where you're seeing the most growth right now as it is. Will it lead to economic growth and job creation? I don't know. That remains to be seen. The answer is yes, it almost has to with more construction jobs, but those tend to be, again, those tend to be short-term and not long-term job creation. We'll just, we'll wait and see what happens. We'll see what happens with if this leads to the natural growth of schools, shopping centers, roads, that path of progress in some markets, in some areas, new construction of homes will lead to that. In others, it'll be just kind of, all those things are there and we're just kind of building new houses along the way. Now, is there any chance that building leads to possible oversupply? I'm going to say no. And here's why. There's a factor, I will call it the X factor, that has not been here in the past in any type of, new market creation, any type of growth market, any type of like 13, 14, 15, 16, when every market in the country was back to pre-pandemic or pre-crash pricing, and you started to see some growth spurts in different areas, especially through construction. What didn't exist then were the institutional investors that wanted to own entire neighborhoods. They wanted to come in and buy. I want to buy all 457 houses that are being built in this particular, development. That didn't exist. It does now. I think that's going to be a real game changer. So, look, market conditions, they're always changing. A construction boom would bring both challenges and opportunities for us as investors. We've got to be very smart. We got to watch. We got to look ahead and be neutral to whatever's happening, right? We always have to be able to adjust our strategies as the market evolves. That's something that we at REI Nation have talked about for years and will continue going forward. You got to be ready to adapt to what's happening in front of us. That's no different than ever before. So thank you so much for listening. I hope you found this helpful. I hope you're looking, for your own investing journey going forward and finding that, hey, these new construction opportunities, they may be right for me or they may not be right for me, but either way, they're going to affect the market where I'm going. So if you have questions, feel free to leave me a question. Like this, chat this, love up the little thumb button there, the heart button, wherever you're consuming this at. Let me know. You can always connect with me here at REI Nation or on biggerpockets.com, the two places where I spend the most time. Until we get a chance to connect, guys, I appreciate you watching. We'll talk soon.